Pakistan State Oil Company Limited, or PSO, has announced its results for the second quarter of fiscal year 2025. The company reported unconsolidated earnings of 7.21 billion Pakistani rupees, which translates to an earnings per share of 15 Pakistani rupees and 34 paise. In contrast, the same period last year saw a loss of 14.14 billion Pakistani rupees, or a loss per share of 30 Pakistani rupees and 12 paise. On a quarterly basis, earnings improved by 82% quarter-on-quarter. This brings total profitability for the first half of fiscal year 2025 to 11.18 billion Pakistani rupees, with an earnings per share of 23 Pakistani rupees and 81 paise. This represents a year-on-year increase of 44% compared to 7.75 billion Pakistani rupees in earnings per share of 16 Pakistani rupees and 51 paise in the same period last year. However, the company did not announce any cash dividend along with the results. PSO reported an 8% year-on-year drop in revenue during the second quarter of fiscal year 2025 due to lower domestic prices. Despite a 7% year-on-year growth in total volumes, during the second quarter of fiscal year 2025, PSO reported a gross profit of 25.03 billion Pakistani rupees, with gross margins at 3.0%. This was likely due to inventory gains compared to last year's significant inventory losses. Finance costs declined by 42% year-on-year to 8.78 billion Pakistani rupees during the second quarter, primarily due to lower borrowings and a decrease in interest rates. On a quarterly basis, finance costs fell by 16%. Other income also declined by 9% year-on-year to 7.08 billion Pakistani rupees during the second quarter, compared to 7.76 billion Pakistani rupees in the same period last year, likely due to lower penal income. The effective tax rate stood at 52.6% during the second quarter of fiscal year 2025, down from 66.1% in the previous quarter.